Hello there. Welcome to Accounting Space. Today, we want to look at a question uh, of June 2024, and we are going to look at question 7 on that question paper. That is a question paper of Cost and Management Accounting N5. And question is on the preparation of the production cost statement. Remember, the production cost statement is prepared to calculate the cost of production of finished goods, and inside the production cost at the beginning of that production cost statement, we are going to calculate the prime cost or the primer cost. That's where we are going to add the direct material cost and the direct labor cost. So we're going to start by calculating the direct material cost, and then we also put the direct labor cost so that we can get the total for the prime cost. So our question reads: the following information was taken from the books of Keynes. They are given a table there of the opening balances that we are having and the closing balances. So our stock on 1 March 2021 represents the opening balances, and whereby we're having raw materials, finished goods, and work in process. And then on 20th February 2022, that's where we're having at the end of the year. So let's just take note of that. So we are also given transactions are recorded for 2021 to 2022. So the table that we are having there is representing those transactions. So if you go down, you'll see that we are given those transactions, and then we got additional information. For the additional information, we've got only one statement that is mentioned there that reads uh, manufacturing overheads recovered during the year equal to 320,000. Let's take note of that. So on the first part of our question, we're going, for the sake of this video, we're going to look at 7.1, which is on the preparation of the production cost statement for the year, and it is got 19 marks. So we go to the other section and we try to see what we have in terms of uh, the provision that is given in the answer book. This is the production cost statement of Keynes for the year ended 20th February 2022. So on this production statement, remember we said we're going to start by calculating the direct material cost. So we can just say raw. Remember, direct material cost include it is the calculation of the raw material cost. So we are saying raw or direct material cost or direct material. So obviously, we are going to employ a formula there to calculate the cost of the material, which says our opening inventory. We add our purchases. If there are purchase returns, we have to subtract. If there are carriages, we add our carriages on purchase of raw materials. Or if there are custom duties that were paid, custom duties we also add there. Then obviously, you are supposed to subtract the closing inventory. Then you can find the cost using that formula. So what we are going to do now is to use that formula. So let's try to identify the opening inventory. So we can just say opening inventory. We can go to the question and try to see what figure do we have in terms of our opening inventory. Can go to the beginning of the question, and you see that we are here, and our opening inventory these are the balances for the opening and the balance for the closing. So on the opening, we are concerned about the raw materials in the beginning of the production cost statement. So we are saying 85,000 represents the opening inventory. So we go there and we are putting our 85,000. So this is what we have. So you can put it in this column, which is 85,000. And then obviously you add our purchases, so you can just say plus purchases. You go to the information to try to see what figure of purchases do we have. But if you go down, you'll see that we have got raw materials received from suppliers. So suppliers are the ones that we buy from. So that's where we do our purchases. So 222,000 represent our purchases. So you can pick that 222,000 and it represents our purchases. So we are also supposed to, we're saying we're adding purchases and the amount that we use 220,000. Then after that, we also try to find out if we have got some returns, which we need to subtract from our purchases. So if you go down, you'd see that we've got raw materials retained by suppliers. This one is 18,000. So these are the purchase returns that we have. So we come here. We are now saying less materials retained or less purchases returns. Can say materials retained or purchase returns are mean the same thing. Then the amount that we are having is 13,000. And then after that, we are supposed to try to find out if we have got any carriages. If you don't have any carriages, then we can add to get our stock available for use. So you can go to check if you've got carriages or custom duties that are there in the person that are going to increase the cost of that of the material. Go down, you see that we have nothing to do with that. So it means we can go back and add so that we can find the stock available for use. So we are saying you are saying less, so you can put brackets. You're saying 85,000 plus 220,000 minus 13,000. And the answer that you are supposed to get is 294,000. You have 294,000. And this figure, we call it stock available for use. And then after that, we are supposed to less our closing stock or closing inventory. And we can always find the figures for closing inventory in the additional information. So I will go just below that trial balance and try to see what do we have in terms of our closing inventory. Of course, we are given opening and closing balance at the beginning of the period, so no need to go below the trial balance. We can go there and find the closing. Remember, the opening we said is 85. So what does it mean? It means the closing is also mentioned there, where we have got 45,000. So that's our closing. If the date is saying 2022, and that's where the year is ending. So we are saying 45,000 is a closing inventory or closing stock. So come here, it's saying 45,000. We are saying less, so we are subtracting. Then if we subtract, we are going to get the cost of the raw materials used. So the answer that we are going to get is raw materials. Raw materials used. And the raw materials used, we have 249,000. That's the answer that you are supposed to get there. You're saying 294,000 minus 45,000, and then you are supposed to get 249,000. Then beneath that, but that's when now we are going to put our direct labor so that we can add it to direct material. Go to the question, try to find out what we have in terms of direct labor. But if you come at the beginning of this list of balances, we have direct labor factory 260,000. So we have 260,000 representing our direct labor. We are saying 260,000. Then we add the two, you're going to get your primary cost, or we call it the prime cost, which is going to be 509,000. That means we have added the two, 249,000 plus 260,000. Then beneath that, that's where we're going to have our manufacturing overheads. But then if you go, the question, you see that we have got an additional information that is there, which says manufacturing overheads recovered during the financial year equal 320,000. So this manufacturing overheads recovered is the figure that is supposed to come here is our manufacturing overheads, 320,000. So we are going to compare this figure. We are going to compare this figure with the figures that if you put all the manufacturing overheads beneath here, the total of those manufacturing overheads, we're going to compare it to 320 to see if there's an over recovered or under recovered. So if this one is bigger than the total of the manufacturing overheads that we have listed there, it means it's a over recovery. If it's smaller, it means it's a under recovery. So just like that. So we can go on and list all the manufacturing overheads that we have. You can pick them from the list of balances that we are given. We start from the top of that table. Start from direct labor, looking for overheads. We've got rent factory, which is 120,000, and this is also a manufacturing overhead. Administration is not an overhead. Salary production manager, this is an overhead again of 100,000. This is indirect labor, so you can pick these two. That is rent factor and indirect labor of 100,000. So we go there. We are saying rent. Rent is 120,000, which is the factor rate. And then we also mentioned about indirect labor of that production manager. Indirect labor. Then for indirect labor, the amount that we have is 100,000. And then we go to pick other. Right, we can just try to see beneath that what we have, beneath 100,000. We have got data, which is not an overhead, creditors, not an overhead, factory equipment, it costs, because on one match equipment, and then there's a depreciation of 15%. So depreciation of this factory equipment is also an overhead. So it will say 15% of 380,000. 15% of 380,000. So we are saying depreciation on factory equipment. In other words, we are saying 15%, which is 0.15 as a decimal, multiplied by 380,000. And then we see what do we get. So we are saying depreciation. Depreciation. Factory equipment. Or if there's space, we can just summarize this working that we have put here. 0.15 times 380,000. Let's try to calculate 0.15 times 380,000. We're going to get 57,000. We are going to get your 57,000. You will see 57,000. And then I will go to the next after depreciation. You can go back to the question and see what we have after depreciation. Raw materials of suppliers, insurance factor 32,000. Insurance factor 32,000. Let's see if we've got another one. We do not have another one. So this one becomes the last overhead that we have. Insurance 32,000. So we can go there and we say factor insurance. It's 32,000. And let's try to see. Right, so we have listed everything. We have listed everything. We can add all the overheads that we have listed there to see the total. Whereby we are saying 120,000 plus 100,000 plus 57,000 plus 32,000. And then we are going to get 309,000. So if you add them, you see that you are going to get 309,000. And this becomes the total actual overheads. And then this total of actual overheads, we now compare this total with this figure. You see this one, the manufacturing overheads figure is greater than this total actual overheads, which means there is an over recover of manufacturing overheads. So here we are going to say add over recovery of manufacturing overheads, whereby we are saying 320,000 minus 309,000, and then we are going to get 11,000. So that's what we have there. So we come now to calculate total cost of production, whereby we're saying prime cost plus manufacturing overhead, 509,000 plus 320,000, and we're going to get 829, 829,000, and we're going to call that figure total cost of production. And then we add work in process at the beginning. We now add work in process at the beginning. You'll only be able to find this figure in the question. So we go there. For our working process, our open working process for 4,000, our closing is 32,000. As simple as that. So we go there. And we have got our 4,000. And then if we add 829,000 plus 4,000, we get 873,000. And then we also have a less working process. That is in the end. Get 32,000. And then the answer that we are going to get is 841,000. And this figure is now the cost of production of finished goods. Cost of production of finished goods. So this is what we have according to the calculation of the cost of production of finished goods. That's where our production cost statement ends. Remember, we're saying the main aim of preparing this production cost statement is to find the cost of production of finished goods. So we have it, it's 841,000. So this is what we have, guys. Thank you for listening. We'll meet again in the next video, but as for this video, I'm out for now.